Well, hello, welcome once again, folks. It's Joe with you here on a Tuesday. It's the 6th of August. Let's jump into the market roundup. I'm going to share my thoughts and ideas. You guys take responsibility for it. You guys know how this works. First off, I want to break down any meaningful news of the day and see if anything came out that could change these markets. We'll take a look at them technically. And as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving directly into the market analysis, you're going to see that we got exactly what I would expect, which is going to be an oversold bounce. These markets were bound to take a break over the last couple of days of selling. Real quick on the daily news, the oversold bounce in the markets after a strong surge to the downside. I like to use the word surge because we are actually in a pretty decent level when it comes to market corrections. I know, folks, it seems like the end of the world out there and the volatility hasn't been as high as we've seen it in a long, long time. But that's how corrections happen. They're hard, they're fast, they're usually always panic-induced, and you can always tie a piece of news to it. This is my favorite part about trading. It might be relevant, it might not. It was just bound to happen anyway. So it's a surge, it's aggressive, it was gap, and hey, it looks like we're having a little bit of a bounce. Now, the Volatility Index did come off some very high readings, but which makes this a significant real corrective move. A lot of times we see one or two big days with some volume and a decent percentage, but until you get a little bit of fear behind it, in this case the Volatility Index spiking, it's really not going to be a valid corrective action. This definitely was. Now we're still hanging around the 20s. I believe we're around 27 on the VIX, which means there could be a little bit more to come, but not necessarily immediately. Okay, so let's take a look at how we finished overall. Yes, bouncing numbers, 0.75%. 1% across the Russells, the S&P, and the Qs. That's why I think it's a bounce. I mean, we've seen 2% downside. I saw Dow was down over 1,000 points the other day. So when you see a 0.75% bounce, it's not like we're trying to put this thing back on. It is definitely just a breath before we might even go back under. When that happens, doesn't matter. Overall, all sorts of bouncing numbers here. Oil just took a little bit of break, and gold coming off of its surge as well. Advanced decline line, 69% of stocks advancing, 28 declining. You'd see a little bit more of a larger number, as we did see a lot more participation in the sell-off than we do in the bounce. Also leads you to believe this is corrective action. 66% of stocks below the 50-day and 34 above. Not much to go on. So let's break these down one at a time. First off, let's take a look at the SPX chart. And this is a very difficult place to find yourself as any sort of optimistic trader when it comes to, hey, that was a bottom, let's go ahead and buy it, because it comes very hard and it comes very aggressive. The volume you can see here, it's still decent, but it's not as strong as you'd like to see. If indeed this was the pivot point, that's going to turn these markets around. I'm going to cast your mind back to here. I kept this chart a little bit zoomed out for this reason, because with this bounce that we're seeing so far, and just to let you guys know where I'm at, I truly expect us to have a little bit of this float higher. We might see a flip lower and then maybe a subsequent move back up, but I would not be at all surprised if the majority this week is kind of floating back up to these levels. Now, that first line I drew coincides with this area that we saw in April. Also, I should say the end of May there, where it consolidated. This was part of this giant ascending triangle pattern. It comes hard, it comes fast, it comes aggressive. Hey, Joe, how come we didn't get more consolidation right around the 54.7 area? Well, it just wasn't going to do it. Taking a look at the short term, absolutely looks catastrophic. Absolutely looks like the end of the world. We take a look how far and quick this fell. But let's be realistic, folks. If you take a larger snapshot of the bigger picture, it's just a very fast, aggressive correction. To this point, could it get worse? Yeah, but it's going to need a little bit more economic weakness versus just absolute greed and traders hitting the cash register. So let's just move straight over to the Qs. You're going to see it's pretty much the exact same thing. a little bit steeper, a little bit more aggressive. It had a whole lot more juice in it. I should say more juice in the squeeze. What's the term, folks? Pigs get fat and hogs get slaughtered. There were definitely a massive amount of hogs. I believe in this last move here, that last squeeze, and some of the communication stocks, NVIDIA, the AI craze, a little bit of a last-ditch effort to get the surge there. So even with the move to the downside, take a look at the last couple of days up. We're starting to coincide with that first line I drew. Definitely correlates with April levels and I should say end of May levels. So a very aggressive, fast, scary, news-driven corrective action. And that's about all we can get from there. Now, I can tell you one thing as we move into the heat map that I'm very comfortable with is this is not a bottom. Too often we've seen these markets correct 2 or 3 days and then all of a sudden they go up for the next 2-3 weeks. Taking in consideration some of the stuff that's been going on overseas with the yen, there's all sorts of interesting impacts there. Some of that money being leveraged into these markets, a general sell-off in some of the darling stocks we already referred to as a great rotation. And this was also happening, folks, weeks ago. This isn't something that came with this market correction. This was already starting, some of this profit taking. It just takes 2 or 3 things of these to line up at once. We saw a little bit of weakness in a couple of those economic reports. I saw weakness in jobs being added and an increase or slight uptick in jobless claims. Healthy, totally fine, but a little bit of weakness tied with all of these things creates that perfect storm of panic domino effect. Let's hit the register. That's it. Now, taking a look at this, you could see that, yeah, this wasn't the bottom move. Usually when we see a bottom move on the stocks over the last little bit, this would all be super, super bright green. And we're not getting that. We're getting some bright green, some red, some sideways. So when you have that little bit of a breath here, it's not that massive push like, okay, that was it. Let's go ahead and start buying for the next few weeks. This is definitely an oversold bounce. Some of the things you can look at to identify it. So where does that leave me? Well, it leaves me basically where I was a couple of days ago. Now we have the -2 on the weekly outlook, and folks, I would like to go to a -3 here, but I'm not getting that 20-50 crossover yet. Yes, they're both sloping lower, and definitely price action is well below those averages, let alone a couple of support levels. So I do have no problem putting it to -2. I put the -3 on the monthly outlook because I do believe that in the next few weeks to a month or so, these markets have a long way to try to climb themselves at least back up to resistance. Now, this could be a move back up to resistance and it can roll further down. Once again, I'm going to go ahead and say it. I've seen a little bit of slippage on some of the economic numbers, but not enough to show the economy is falling apart. Some of these companies that have come off the top, NVIDIA, Meta, some of these moves that have been so high, and they look like they're falling apart. These companies are still worth a ton. They still make a ton of money, and they're still doing well. We have a consumer that still is consuming. Yep, sure, slight uptick in some of those bearish indicators, but not enough to really justify a move like this. So I think it's just, for now, an aggressive corrective move. Now, what did I do? Let's go ahead and take a look at. I brought forward last week. I got back from vacation a couple of weeks ago, and I figured I'd bring this forward. I was taking a look at, hey, I want to search for the real estate sector. Looked pretty strong. The utility sector was kind of sideways, also strong. You can see that today I actually have Duke up here. And then I liked the communication sector for continued weakness. So I went ahead, and regardless, folks, this was right before all this started to happen. And all of these held true. I found some strength in real estate. I found some sideways to up in utilities. And I found some weakness in Roblox and Roku here down with the communication sector. So it's interesting to see how devastating and crazy this big move was. But my top-down approach 2 weeks ago hasn't really changed. So we'll take a look at those. Now, it might be a little bit difficult to trade. You guys might be a little reluctant. It's a little scary out there. That's fine. You don't have to. But here's a couple things I'm looking at. First off, we've got, this is the real estate sector here. And now, you can't see further back because I did zoom in. But further back, it's at a resistance level that it saw the beginning of 2024. So it's showing a lot more strength. Now, what you guys can see is that it is definitely at this high base kind of a surging move. Lots of volume over the last few days because it did have its earnings, and it looks to me that it's just kind of exceeding or breaking out of a high base. So once again, decent chart, kind of doing its own thing. I think it's driven quite a bit by real estate and the possibility of maybe interest rates coming down if the Fed takes action, but a good move to the upside nonetheless. So let's move over to my sideways. Also, folks, I did have Duke. I know it was utilities, but it was also on my watch list for the bull side. This is NEE. I like this one. I just like the consolidation pattern on it. This is going to be something a little bit more sideways. I'm going to take it a little bit more range bound. I don't know if anything stays too sideways based on where these markets are and the volatility as of late. But if I'm going to err to one side, it should be to the upside. You guys could see that this looks like almost like a bull pullback. Now, my overall focus, I wish I could erase one thing, but I got to redraw my square, is definitely going to be within these ranges. I would actually be very comfortable and happy to see this kind of retrace back to where these moving averages are trying to crisscross before it starts to maybe climb back higher, consolidate. So something sideways here, maybe a targeted butterfly or maybe a credit spread, sideways to bullish credit spread might be something fun in the shorter term. Now, most of the trades I'm looking for anyways, folks, just to let you know, aren't going to be too much more than about a week and a half. The reason being is volatility just says I shouldn't be in these markets. For me, more than a week and a half. It's just you're kind of guessing at that point. So sideways there on NEE. Let's move over to the bear side. I liked ROKU. Roblox is very similar. I think I went with ROKU just because it was very close to a support level that is coming back to right at this area. This is not ready yet. It's definitely within its bear rally. Could this make it all the way up here? It could, and that's fine. If it wants to roll over this point, I'll just use my first line as a target. I'm comfortable that a lot of these stocks, Roku's not a bad company. It's just being sold off a little bit, profit taking, and we could take advantage of that. Once again, something more sideways to bearish. I'm not going to be -3 or +3 on any of these. I hope you guys know that. Slightly bearish, slightly bullish. I'm looking +1, +2, -1, -2 at most. Just kind of goes to show that that's what's out there. So overall, folks, we could see corrective markets through the rest of the week. And what I mean by that, they don't have to go up, 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 up. I mean, we could have an up day today and then kind of a sideways day and then a big down day and then flip-flop another big up day. When markets bounce, and Corey's great with saying this, he says the biggest moves to the upside are usually in corrective markets and bear markets. I agree with that, and I think that there's more room, or I should say more meat on that bone for traders to actually take profits, and it is going to look, and I love this word, and it's going to feel like panic and a sell-off in the end of the world. It's not. So far, it's not. We're close to some support levels, and yeah, it could turn over to do something a little bit more ominous, but we would need an economy that is starting to really slip and fall and worry. A couple points to reiterate on that we've talked about. COVID. COVID was a legitimate reason that slowed the economy, that panicked traders to where it affected our GDP. The financial crisis of 2008, it absolutely destroyed some banks, it destroyed loans, and yes, it put people in a financial burden to where it was slowing the economy down. This, just a round of profit taking, super aggressive. There is some slowing, but not nearly there to support an overall bearish market. A corrective market, yes. Don't confuse bullish reaction for a bottom. This isn't one of those times that we had 2 big sell-off days and that was it, and then we're going to go up, up, up for the next 2 weeks. That volatility alone tells me that, hey, anytime that I see a little bit of strength, I imagine some traders are going to take some more profits. So it's not going to act like the corrections that we've seen over the last few months. So keep your focus on the overall chart patterns. Let them dictate if it is indeed a bear rally to resistance or if it's going to consolidate and do something else. Economic reports, not much this week at all. I really didn't see anything out there that's really going to change anything, especially in light of what's going on in the market. Slight weakness seen in employment and unemployment last week. 2 things that I saw that it was kind of funny because those kind of came out a day or so before this market started to really roll over. Once again, I can always find a reason for anything if you look hard enough. But those numbers were not bad enough to warrant the end of this last surge or to start a bearish trend. Earnings reports, we got AMGN out, Airbnb and Devon Energy, they're out right now-ish. Keep following along with that. We have had disappointment. Intel had some disappointing news. They cut their dividend and they got really spanked for it, but there's other companies out there that aren't missing. They're coming in line and we're just seeing a little bit of a sell-off. So I wouldn't really go super panic attack. Yeah, that volatility index was a very interesting spike, but I do believe that had a whole lot to do with kind of what's going on with the yen and more of an international impact and how it correlates with the equities over just something specific to the U.S. economy. All right, that's my 2 cents, folks. Hopefully that's been helpful, and thanks for joining me. We'll talk to you next time. Bye, everybody.